All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Wednesday, March 15, 2017. Let's look pre-market here. Market's up a little bit. This could change a lot today. Crude is up huge. Just a few minutes ago, it was up around 2%, down to about 1.75. So we're going to keep an eye on that for that rubber band bounce we've been watching for very closely. And gold is down a little bit. Now, this could all change today because we have oil inventories an hour after the open, which could greatly impact oil and that'll set the trend going forward. And then, of course, today is the big Fed meeting or decision on the rate hike. Now, here's some stuff you guys need to know here. The expectation for the market is 0.75 for the interest rate hike. Some people think around 1. So that's going to be the key range here. Now, they could surprise us if it becomes more than that. So if it's around 1 or higher, that could send the market tanking, or at least a deeper pullback. So let's look at what we're seeing with SPY here. We are at all-time highs or near all-time highs here at 236.90. This could get us to test the 50-day moving average or even pull back deeper. If we go outside of expectations, and that's probably not going to happen, but we need to be aware of that. Now, really big shocker, and they don't raise as expected. Maybe it's only 0.25, or they don't raise at all, which is unlikely, but you never know what could happen. Remember Brexit? We had no idea that was going to happen, and then that sent the market for 2 or 3 days crashing. So be prepared, not necessarily expecting, but be prepared for the unexpected. If the market, if that was to happen and we get no hike or only 0.25, then that could set up a big explosive move to the upside. So be on the lookout for that. And if what's expected happens, we don't expect any fireworks here. You know, the markets could start to pull back, or it could break out and test new highs, but probably not an explosive move that really sets a trend going forward. So because the market has already kind of dealt with that here, going into the Fed, kind of expecting that. That's why we had this 4-point, probably why we've had some of this 4-point pullback here. So really focus on the unexpected. If the expected happens, we're just going to watch the price action. That's the other thing. Sometimes price action does not act how we expect it to. So we're going to watch this very closely, especially this next 3 or 4 days, because the first day doesn't always set the tone, and the second day doesn't. It's what happens coming out of this. So early next week is really going to set the direction for us, but we need to really pay attention to what goes on today. Now, a couple of ways to play this. One, do what you always do, trade the stocks you always trade. Go right now, probably focus on the FANGs, the big tech, and some of our other focus list stocks. If you want to get really aggressive, you can trade VIX, and we would use UVXY. And I go into this in a video I just put out on the blog, so you guys can take a look at that as well. But UVXY here is the VIX triple leveraged ETF, extremely volatile, but it's low risk here. We could get in, and you can't be afraid of getting stopped out, but maybe you take a little risk here, you stop out if it gets down to 18 or 17. But when this thing gets moving, and that's related to when the market pulls back, you can get 100% moves here. This is, look at what SPY did back in January. It was down around 8 to 10%. And also back here in September 15, 2015, we had this 10, 13% move here. UVXY spiked over 100% during these periods. So it's a very low risk, expect to get stopped out play. But if the market pulls back, this thing is going to fly. I mean, it would go from 18 to 25, 30, maybe even 35. So very low risk, high reward trade. You could put this on right before the Fed decision, and you know, if it starts to pull back in, just get out. But if it starts to spike, just stick with it. You could use it if we get an indication the market is pulling back maybe tomorrow, and put this thing on, and then we could get a big spike. And then the opposite of this, SVXY, which is essentially going along the market, it would move just like the market is moving, but with a little more volatility. It break out here, maybe we get a run from 135 to 150 or 160 if the market does break out from this point. So we're not making any predictions here. We're not going to go in thinking, oh, the Fed's going to do this and I can short or I can go long. We're going to wait for it to happen and then watch the price action. So that is the main focus today. Keep the focus list stocks. It's the same stocks we're looking for, but we probably won't really get aggressively trading them until tomorrow, Friday, or maybe even next week. And then current positions here, Tesla broke out back to our entry level. So holding on through what was basically a reaction to an analyst downgrading the stock. Now, big move yesterday, and hopefully we get the continuation move here. Now, our Netflix, our Amazon, probably going to move with the market. So we're kind of prisoners with the market on this. Hopefully, if the market does pull back, they would hold our stop levels, and we could, when the market does come back, we could get through here. Or if the market doesn't do a whole lot, we probably would start to hit our target. So we've got to wait and see on that. We've still got the NVIDIA short, which, stop is right in the 103s here. We'll see how that plays out. Right now, we're set to open around 102. Entry was short around right under 98. And then FAS is our financials short. Basically, if the market stays where it is, if the expectation comes for what the Fed's going to do, we could see a pullback. If there's a surprise, financials could fly. If there's a higher interest rate hike than expected, financials could fly. So we would get stopped out there. And then TZA is our hedge against the market. I may put a UVXY position on. I'm not sure. I definitely will on my more aggressive accounts. But for this account, I'm not sure if I'm going to do it. I am hedged already. So if the market does tank, we do have 3 positions that could help us there. And then we have 3 longs. So basically, we're in a good space to not be taking on any risk with 3 longs and 3 essentially shorting the market plays. So that's it for the trade report today. Focus list is the same. We're going to really key in on what goes on with the interest rate hike today. And then I'll put an intraday video out today, guys. So I'll see you guys later.